There are many people that think there are signs that the Fed is having success over the last couple of weeks, particularly on liquidity issues and specifically in the credit market in the high-grade space. What's your take right now, Jim?
I think that they're having limited and temporary success, that the liquidity problems are as simple as there's way too many sellers in this market and there's not enough buyers, and that's how you get a liquidity problem. Only when people start broadly to believe that we've found some kind of new post-virus fair value will somebody other than a dealer or the Fed itself step in and try and buy, that we will actually find some kind of a solving of the liquidity problem. So it's there in limited terms, but it isn't there in something that suggests that maybe it's over with for good.
Jim, I found it really useful to separate the breakdown, the aggressive drawdown in markets in three different phases over the last several months. The initial phase was the risk aversion surrounding the coronavirus uncertainty at the turn of February, in the middle of February towards the back end. Then we had the oil rout and the credit shock pile onto that as your second phase. And your third leg was the liquidation, sell everything, the really, really messy phase that we saw play out a couple of weeks ago. And my take at the moment, Jim, is that people are mistaking progress on the third issue as progress on everything. Does that resonate with you, Jim?
It totally resonates with me. I think that that's exactly what's going on. And that what happens in that environment is that they're forgetting the bigger picture. And the bigger picture is we know that there will be a peak to the case count, and we know that the virus will subside at some point. And we also know that the economy will restart at some point. But what is the long-term damage? What is the long-term change? How did we do business in January that we won't be doing it that way coming out of this? And the answer to that is probably there is going to be a change, and those answers are we're going to have a less aggressive attitude coming out of it, a deglobalization, maybe moving businesses and operations back to the United States, which means higher costs, which means more inflation. So, yeah, we're looking at the short term saying, how do we get rid of the liquidity problem today, thinking that once liquidity appears that means the problem's over, but we're neglecting to talk about the bigger picture of how we're going to conduct business in a post-virus era.
Well, Jim, something I want to discuss with you then, just to wrap things up, is what your advice is for investors right now. I get many people on this program, as you've seen, I know you have, that are talking about adding just a little bit more risk incrementally. I'm leaning on the advice from Mohammed Al-Arian recently, who is basically asking a very simple question. What's the biggest mistake that you can recover from right now? Going too early or waiting too long? And his advice to people is to wait. Is that your advice as well?
Absolutely. There's an old saying on Wall Street that you don't want to catch a falling knife. There's no urgency to try and jump into a market because it's down, thinking that it's going to rebound. And what I was saying before, I'll say it differently. We are transitioning from a pre-virus economy to a post-virus economy. We don't know what that's going to be. Don't think of this in terms of some kind of mean reversion. Well, we're all going to stop working for a while. The markets go down. We're going to start working, and then we're going to go right back to where we were before. We'll come back, but we don't know what we're coming back from, and we don't know where we're going to. And that could be a level that is still below us. It could be a level that is above us. You don't know. There's no hurry in trying to buy this market. I agree with Mohammed. I would rather be too late
to say
than
we
too
don't
early.
know. And we've been talking about that again and again on this program.